Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Michael Stohler. He first started real estate investing in 1999, and his company now has a portfolio that includes hotels, multifamily, and residential properties. So thank you so much for being on the show, Michael.
Thank you very much. It's a pleasure to be here.
Awesome. It's great to have you on. So give us a little background on yourself, both personally and professionally, prior to getting involved in real estate investing back in the late 90s.
Yeah, I come from a small town, Indiana, where there's nothing to do but, bale hay and, watch the corn grow. Traveling up to Indianapolis, the big town, you just look at these houses and things like that, and you just figure out, man, what do these people do for a living? And found out a lot of them were in real estate. So I was like, well, let's do it. And I picked up, as everyone does, Rich Dad, Poor Dad, and read it and decided it's like, man, this is it. So I went to a seminar, just like probably everyone else's second step, and said, oh, this is easy. So I went back to my small town and bought, I ended up buying 8 units. And that's when it all started going crazy. Because here's the thing, in seminar land, they tell you it's like easy, here's how you buy it. But, if back in the late 90s, small town Indiana, we didn't have Google. I don't even know if Google was around there. I think it probably was, but you don't have laptops, you don't have that type of stuff. So I could not, there's no podcast, there's no mentors, there's no coaches. I did not know how to be a landlord. I didn't know what a lease was. I didn't know what it looked like, 5-day notices, how do you evict people? I didn't know anything, the buying part was easy. So, you probably get a lot of, get rich quick and, you can be a millionaire and you probably don't get a lot of the sob stories and the real truth stories, but man, flamed out big time. And that was my first start into the real estate. We had to give them all back. Fast forward, I knew that was it. I knew that was the way to do it. So when thinking outside of the box, how could I get that knowledge? How can I get that experience to make it work the next time? So I actually went to work for a property management group. So I figured, it was a private family that owned around 8,000 units.
Wow.
And I figured, they know what they're doing. So I went to work for them, stole some paperwork or borrowed, some paperwork. So I was like, oh, okay, that's what a lease looks like. This is what it meant, the addendums, and this is how you do it. And the evictions, and learned a lot. But it took us a little while to get out of our financial hardship. I ended up being an airline pilot. That was my career. And airline pilots make decent money. So then we decided let's get back into it. And boom, it was off and running.
Nice.
So that's kind of the quick background.
Awesome. So kind of give us an idea of what your current investing strategy is. You went from like a residential multifamily and a few years back or several years back, you made the switch into hotel investing. So can you explain your strategy now when looking for properties and after you acquire them, like how that all works?
Yeah. So what happened back in, let's see here, 5 years ago, I had a guy, it was a group out of Idaho, of all places, that was looking at a multifamily of ours in the Phoenix area. And it was performing. I did not want to sell it, but they kept coming back. And fourth time I said, no, I'm making 6 figures off this thing. Don't want to sell it. But then they came back, said, last year, I'm going to give you this amount. And I'd be a fool to say no. I had that particular property for 10 months. And I think we netted almost seven figures, like
Wow.
$860,000 in 10 months. So I was like, I'd be a fool not to do it, right? Well, at that point, I didn't want to be buying another multifamily at 3.5 cap. So I was like, what do I do? It's like, and again, for all your listeners, how do you get to know people? You go to your local RIA, you go to all these different events and networkings. It's all about who you know. I knew a guy that had about 15 years of hotel experience. So got with him. And how do you bust into something, an asset class that you don't know about, you don't have any knowledge? What I did was I offered him, I said, I want you to find me a property. You're going to teach me how to do it and what you're doing. You're going to run it for me. You're going to teach me everything you know. And in doing so, I'll give you an actual piece of the ownership as your hardship. And he agreed to that, because I wasn't paying him a salary to run the operations. I was giving him a little bit of property management fees. But then the big thing is I got an on-site mentor to teach me about hotels, and I gave up a small portion, at the end, as far as ownership, and boom, got into hotels. So another thing, what are we doing now? We're doing funds, some syndications, and we're still heavily invested in the hotel space and going to be in the future. I think it's an underserved asset class that people, here's the thing, and when people say, oh my God, COVID and hotels, I'm not going to get in hotels, that's when you buy hotels, right? Yeah. You don't go and say, yeah, it's like you go to these RIA meetings and everyone wants to be in multifamily. That's when you don't invest in multifamily, because we don't really do cap rates. But, if we did convert it, we're still getting 9-10% in hotels, on up, instead of 3.5 right now in multifamily. COVID has really changed the way that we look at hotels and what type of asset class within the hotel space. And when we do hotels, it's not a 3-year, like a lot of multifamily, it's like kind of a 3-hold or even less. Because remember, hotels is a business. It's not really real estate. It's a small business that sits on real estate. So there's a lot of things to do in order to get those things going again, and the gross fund, the gross income multipliers up, and all of that. So they're usually 5, 7, 10-year holds. We call hotel investing patient capital, patient investing. These are long-term, get the dividends, but they're long-term holds.
Interesting. So what are the main differences between investing in hotels versus multifamily? And I say this in the sense that, you're looking for multifamily and you have an idea of markets, you have an idea of what I want to see in a neighborhood. When you go, someone sends you over a offering memorandum to invest into something that's for sale for hotels. What are the first 10 minutes that you're doing with that? What are you looking at?
Yeah. If it is a franchise, I look at what it is, the reputation of the franchise. We only do franchised. If we do an independent, we'll attach it to a franchise. So I look at, what is it? Is it Hilton, Marriott, or Radisson? What is it? The second thing is what's really, really important, even more important, that we learned during COVID is what's called the drivers. What is driving someone to that hotel? Pre-COVID, I would use like one driver. Well, it's next to a university. You can't go wrong there, right? Well, unless no one's going to school and no parents are going to visit the kids in school, and you don't have a very good asset anymore. Skiing or whatever. So we look at now multiple, at least 3 drivers. Why are you going to this hotel? Is it off of an interstate? So you just need a place to stay at, for the night. It's just off of the interstate. Is it maybe across the street from a hospital, or maybe spring baseball training, vacation? So there's multiple reasons why you're going to visit that hotel. That's the second thing I look at. If it's only one, I'm not going to touch it, because COVID has taught us that one thing goes down, you don't have a hotel anymore, right? Some other things is the comp set, the competitors that are around it. Multifamily really don't need to look at that too much because everyone needs a house, right? There's just a lot of places need for those types of things. But I look at, especially within my, like if you do a choice hotel, well, if I do a Quality Inn, where's the nearest Comfort Inn? Where's the nearest ones like it? Or where's the nearest middle of the road limited service type of hotels? So I look at the comp set and I look at the star reports. There's a lot of different reports that you can get in the hotels. What's the true ADR, the average daily rate? And then we look at, then you just kind of break it down, but it's different from multifamily. You're running a business, so you have to look at it also as the vendors and all this sort of thing, and kind of breaking down the business side of it.
When you're doing this, do you ever plan on changing flags? So if it's a Radisson, change it to something else, or if it's something maybe not as nice to something that's a little nicer of a brand?
Yeah, great question. And yes, we do. We had a older Best Western that we converted to it was a choice hotel. And when we do so, what we do is we look at, in that area, does Best Western do well? And then we also look at, why is the owner selling? What could be that Best Western is now coming in and saying, hey, you need to do a $1 million, $2 million renovation, because every couple of years, there's always something that the franchise is making you do. Furniture and the brands, the sign, it's just, they're always updating because they always want this nice experience. And then they want a lot of equilibrium among every single hotel that's in that class. So if you have a Radisson Country Inn Suites, whether you go to Phoenix or you go to Denver, they all kind of look the same. So every guest knows what they're getting into. And if there's one that they haven't been doing it, they haven't been updating it, it's getting kind of old. It's like, well, do I want to spend $2 million doing a Best Western, or could I get a bigger brand? Choice Hotels has millions and millions of followers, and convert it to a Quality, because and spend the same $2 million and get more guests, a better rewards program for the experience.
Interesting. And how does the financing vary between doing hotels and multifamily? What kind of financing terms are you guys usually finding? And how was that, or if it was, I imagine it was, affected by COVID? And is it back to pre-COVID now or not?
Yeah, well, yeah, good question. The first part, the biggest, when you get in a larger multifamily and you get into hotels, it's a commercial loan, right? The nice thing about, you have to remember with hotels is it's a business. So I can get SBA loans, okay, Small Business Administration. So I'm getting 7A loans. I'm getting very low down payments, very low interest rates. And so they're much better. But now you're capped at, I think it's still, I don't think Trump changed it, but I think it's still like a $5 million cap. So you have $5 million to play with at 2-point-some% interest and a lower down payment. So you have to find those banks that deal with those types of loans. So it's very nice. As far as COVID goes, yeah, your normal banks really aren't going to touch the hotel loans unless you're talking about, $40 million, $50 million. The legacy banks just don't like smaller individuals in anything, probably multifamily and hotels also. But you look at community banks that really they come in, and those are our favorite, our best friend. The smaller community banks that says, yeah, Mike, we're trying to get into this market. We're trying to get in this market. You have experience. We'll give you an $8 million loan or something like that. And they'd rather do the SBA, or some type of a federal guarantee. But that's what we look for. And then I forget in multifamily, it's been so long since I did my first loan, but they require, and that's why I did this partner on it. They require more experience, because it is a business.
Yeah. Interesting. Yeah, that's something very interesting about the community banks, because I tell people that in multifamily as well, especially because in a community bank, obviously you have people that might be making the decision that drive by the asset that you're trying to acquire and reposition every day on their way to the office. And it might be a small team, like be 3 people that make the decision.
Mm-hmm.
You know, you're going to a large bank. I'm not going to name any, but you go to a large bank and there's a investment decision, you know, a group that you never talk to, you'll never see. They've never even been to the town that you're trying to get financed in.
Right.
And
right.
unless it's, you know, 9 figures or something, you know, or whatever it is, 8 figures, they don't care about it. And they're just like, you know, we're just, we need to make, you know, we want to make loan more money and on bigger projects. But
yeah,
very interesting.
And that's true. You know, because I remember trying to get a loan and in Arizona, and the decision makers were in Seattle. And all they did was the guy Google mapped it and saw that there was like cars in the backyards of the neighborhood behind us. And he just immediately said, no, this is like the most horrible neighborhood. And we're like going, well, you know, this is Arizona. This is just what they do. You know, there's cars in the backyard, you know, and chickens, you know, I mean, it's just, you know, you might see some goats, chickens, and a couple cars in the backyard. It's just that type of neighborhood. And the asset though is what you want. It's 100% full, but he Google mapped it and said no.
Thorough underwriting on their part.
Thorough,
right? So,
yeah.
I think it's something like that is they just don't want to make the loan, so they're just coming up with the first thing that their assistant finds and tell you about it. But well, one last thing before we get into one other part I want to finish up with. But how did your hotel portfolio fare during COVID? And when we went through like mid 2020, are these banks that you worked with, were you able to kind of like work with them on loans? I imagine there was a lot of that. Did you find them pretty easy to work with? And there's some banks that maybe didn't, and you won't do business with them again?
Yeah. So in 2020, all of our hotels stayed open. Another great advantage of hotels over multifamily is, this might sting a little bit, but you know, I didn't have the federal government tell me I couldn't collect my rent, right? But luckily my hotels are in states where the governors didn't tell me I had to shut down. And so that is one of the things that I look in the future. It's like, okay, when I do some future acquisitions, it's not going to be in a state that if something happens, boom, everyone has to shut down. Everyone, no matter what, no matter how mild or severe. And, you know, I'm not downplaying COVID at all, but I want the choice whether or not I need to, you know, can shut down or not. And there's a lot of hotels, a lot of small business owners, mom and pops, that will never survive because certain state governors forced them to close. So one thing that we are able to get is, because we're small businesses, is we were able to get the PPP loans, which is payroll protection, and the EIDL, the disaster loans. So that allowed us to, you know, have a lot of capital and help with payroll. So we were able to stay open. The hotels that did well are the limited service and then the extended stay. It's the ones that concentrate, you know, we've got 3 restaurants, we've got, you know, 10,000 square foot of conference space. None of that was happening. So you had all that square space that didn't do well. The banks were very well. You know, they helped us out a lot. You know, 4 or 5 months of deferment plus, because it was an SBA. The federal government stepped in and said, you know what, you don't have any payments. We're actually going to pay your payment for 6 months. No interest. You know, it's just like, boom, we're paying your interest or your payment for 6 months. So because we're a business, we're able to get all these different things, and state grants and federal grants and all this stuff to help us. The banks that did not do well, the hotels that are not going to make it are called ones that did the CMBS loan. A CMBS is basically the stock market. You know, it's a commercial, it's a market-backed security. You can't go to the stock market and say, hey buddy, I can't make my payment, can I be deferred for 4 months? Well, they don't have that that type of, they just can't do it. And plus on the CMBS loans, you can't have a second. So they were not able to get a single PPP. They could not get any EIDL. They couldn't do anything. So they're 5, 6, 7 months behind on payments. And even though there might be 100% occupied now or doing very, very well, they're too far behind.
Yeah.
Those are the assets that are getting ready to come in, and that we'll look at with our funds and syndications is buying those up.
Yeah. Interesting. One last thing on the hotels before we kind of transition into a couple other questions. Management, I feel, on multifamily or real estate in general, is it makes or breaks the deal, right? So you're going into it. I imagine you're finding deals. I imagine these are, you have to do some turnover in the business portion, right? The front office, let's say. How does that work? Like, tell me, you're hiring them yourself. Who manages that team? You know what I mean? Is that someone that you're doing, that you have, that's going to, they report directly to them, like the manager from that hotel?
Yeah. So we have a team, operations team that, we'll go in and we look at an asset. So in the hotel space, you have what's called a general manager. He or she is the person that does the entire hotel. And then you might have a front desk manager, like a housekeeping manager. And then you have maintenance people. You could have 18, 20 on up, just depending on the size, that many employees. So we go in, and most of the time the general manager is gone. Okay. Because the type of hotel that we look at, something's been going on. It's an out-of-state owner. The GM's been running it their way for 4 or 5 years. And the reason why we're buying is because they did a bad job. So we'll go in and bam, go out, put someone in place. And then we basically interview everyone to keep their job. It's not whether or not you're fired or not, but we don't know you.
Yeah.
So we interview everyone.
Yeah. Yeah, that makes perfect sense. The general manager, I could see being the first one to go, and then you kind of go from there. You put someone else in that knows how to manage a hotel, and you just kind of do a little job interview for everybody else through. So it makes perfect sense. So one thing, Michael, that I saw that I'm a huge advocate of virtual assistants, and you are as well. Can you explain how you utilize VAs in your business, whether it's managing your business or managing existing acquisitions or new acquisitions?
Yeah. Well, basically virtual assistants manages my life. For all the investors out there, you're going to get to a point where you need help in order to grow. It's in every book, it's in every mentorship, it's in everyone. There's going to be a point where you want to work in your business or on your business, right? So you have to get to that point. And for a lot of us, it's like, well, I can't afford now $15, $20 an hour plus vacation, plus withholdings and vacation, all this stuff, all this crap that goes along with hiring people. So I utilize virtual assistants. My virtual assistants, I loved it so much that I actually created a company called Gateway VA. My virtual assistants are out of Mexico. I love Mexico because they're basically on my time zone. Okay, they're central time zone. I text them, they respond. I don't like the Philippines. There's nothing wrong with the VAs themselves and the workers themselves, but I don't want to get emails at 2 o'clock in the morning. I don't want to write something and then get the response at 2 o'clock in the morning. I want almost immediate. I have my own podcast. I have a virtual assistant that's in charge of my podcast. They schedule everything. They do my show notes. They do the bio. They basically do everything. All I do is look at my calendar, like today. Oh, I have a 9:30 o'clock podcast. And I didn't really do a lot of it, the interaction. They also input all my bills into like QuickBooks for the hotels. Each individual, they just get all the bills and boom, they put them all in. They just do all of that remedial minimum wage type jobs. They do it at a third of the cost. These are college educated people that are smart, want to work, fraction of the cost.
Nice. So if someone wants to hire their first VA, like how do you suggest they go about it, and what should they avoid when they're doing it?
Yeah, a good question. There's two types of ways to do a VA, and it depends on what you want. If you don't care about having a single person, now, my VAs, I've had them for several years, and it's one person. They're like my employee. But if you're just looking for someone to call, call lists and call, tax liens and things like that, there's two types of VAs. One is you're going to work through a company that handles a pool. They may have 100 VAs working for them, and you have this task done, and you won't get the same VA twice. Okay, you have that. You have to decide, is that what you want? And then they get a kick. They may be paying the VA $5 an hour, but you're paying them 10, and they get the VA gets 5, and the company gets 5. And if you don't want any personal type of assistant, then that's the way to do it. The other type is like my company, and like a lot of the others, where you're just paying me a one-time finder's fee. Okay, and then we guarantee, you're going to do the interviews, you're going to set up the job descriptions, you're going to do everything. You interview these people, you find someone that works for you, and then they become your assistant, and you can have them for 90 days or 5 years, but it's one person. And those people learn your systems, they learn how you do things, they learn everything about your business, and they become your right-hand person. That's the other thing. And then what you do is you just pay them like you'd be paying, I'm not going to say like a regular employee, because you have all these withholdings, but you're going to pay them directly, and I'm completely out of the picture. I just have that one-time fee. And then, we have a guarantee that they'll work out. But those are the type of things.
Okay.
Just keep in mind, what type of VA do you want, and how much involvement do you want? Do you want just a pool of people, or do you want an actual assistant?
Yeah, that's great. The other thing too is I always say, like, start with a couple tasks, because you're not comfortable if it's your first VA, and then then just kind of add on to it as you get comfortable with them. And by the end of the time, you'll know, you're like, wow, this person's working like 20 hours a week for me, like taking off all these things off my plate. But
and another thing is, don't be picky about, I'm paying them $40, for 40 hours a week. And, I need to make sure they're working 40 hours. It's like, don't worry about that, because the pay for 40 hours is nothing. And all you care about is, are they getting everything done that you want them to? Don't be the micromanager with the virtual assistants.
Yeah. It's like property management. Yes, we know that somebody that's going to manage your property is not going to do as good as yours. They're not going to do as fast as you. They're not going to do everything that's right. But what do you care if you're paying someone a few dollars an hour and it takes them 25% longer? It doesn't really matter.
It doesn't matter.
But Michael, so tell me about what common mistakes that you see real estate investors make.
Oh boy. Yeah. Well, I've probably made all of them. Don't do it yourself is the biggest thing. Okay. Learn. You're going to spend money anyway. All right. So you can spend money making mistakes, or you can spend money paying a mentor or reading books and doing it correctly. And if you pay the same amount and do it correctly, then where you're gaining is in time. It's going to take you a lot less time, because if you pay the same amount and just keep making mistakes, you want to learn from your mistakes, but I'd rather you learn from my mistakes, okay, and Charles' mistakes, and then do it correctly, and you'll be successful quicker. That's the first thing. Get a mentor. The second thing is build a team. Team is so important. I'd never go to LegalZoom, to get paperwork. I have an attorney. I have a CPA that knows real estate. I have, the contracts attorneys. I have my eviction attorneys. I have my syndication paperwork attorneys. I have all this team. I have my assistants. So the first thing is find out, and then the third thing is find out what your unique ability is. What do you love to do? Is it finding acquisitions? Is it maybe you love running the day-to-day. Maybe you like being the landlord. Figure out what you like to do, because if you only do what you love to do, you'll be more successful. My problem was I got so bogged down in doing everything that I wasn't growing my business. So it finally, in one of my coaching sessions, I need to start delegating, concentrate on my unique ability.
Okay. And our second to last question, what do you think are the main factors that have contributed to your success?
Oh, good question. Analytics. I'm very good at analyzing deals. And when you analyze deals, here's the thing is, when you get into real estate investing, it's no longer a personal decision. It's no longer, is it pretty? You know, it's like the residential real estate. Oh, it needs to have the granite countertops, has to have a view. I don't care what it looks like. Does it make me money? Okay. That's the first thing that you have to really get down into it. And don't take anything personally. If you're going to be in multifamily, you're going to be called every name in the book. Remember, this is a business decision. And the fact that you're evicting people and these things, don't take things personally. It's a business, because if you take it personally and then no one got evicted, because remember, if you slack on one person, they're going to talk to every 50 other people, and then everyone's going to say, well, they didn't have to pay, I don't have to pay. Then it just snowballs. So everything is a business decision. I'm sorry that you're a single mother with 3 kids, but you haven't paid me. You know, so get that fine line of, it's a business decision, and this is a business. Number 3 is, why are you doing this? What is your purpose of investing in real estate? Mine's not the money. It may be at the beginning, but money will come. For me, it is, and I have it above in my office every day. I look at it. My goal is to build a life that I don't need a vacation from. And that's my mantra that I look at every day. So find out why you want to do this and why you want to be successful at it.
I love that. That's great. So how can our listeners learn more about you and your businesses, Michael?
Website is Gateway PE, as in private equity, gatewaype.com. Find me on LinkedIn under Michael Stohler, Stohler, and let me know how you found me, and I'll be happy to answer any questions you have.
Yeah, and on that website as well, just for listeners, he has links to obviously his real estate investing business, but also to his VA business. So if you want to learn more about that, it's very interesting. And I want to thank you, Michael, for coming on today, and looking forward to touching base with you in the near future.
Absolutely. Thank you.
Have a nice week.
You too.
Hi guys, it's Charles from the Global Investors Podcast. I hope you enjoyed the show. If you're interested in getting involved with real estate, but you don't know where to begin, set up a free 30-minute strategy call with me at schedulecharles.com. That's schedulecharles.com. Thank you.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.